Start recording. Alright, we're gonna see if this works for the millionth time. Okay. Alright guys, so man, running out of little energy tonight. This is like my 5th try trying to figure out how to do all this and get videos uploaded and do video editing. These things I've never done, so we'll get there eventually. But anyways, so the whole purpose of this channel is we're just going to be going over everything that I do on a daily basis, from what my thoughts are going into the day, the trades that I make or kind of don't make, what I'm watching, and then the plan for the next day if we have time for that. So let's see if we're just recording here. I want to just start talking for 20 minutes. Yeah, I guess we're going. I guess it's getting everything. I have no clue if I'm on screen. Oh yeah, I am. But I think it kind of blocks out the bottom right here. I don't know. Anyways, we'll get it. Okay, so my goal is to be able to show you the actual trades, because this is all real stuff. But I don't know how to edit out stuff, you know, so like position sizing, dollar amounts, right? You know, I want to edit that stuff out, but or how many contracts. But since I can't do that, my goal is to get a video uploaded this evening. We're gonna do that. I'm gonna try my best. So until then, that's all we got to go off of. Is I'll just kind of talk through everything that I did and the trades that were placed. Okay, so let's get started with what the plan was for today. So for NASDAQ, the plan was, so this would have been yesterday here, the plan was to do nothing. Things were very overbought. I had already exited my NASDAQ positions, or my position in the NASDAQ, I guess I should say. So my plan was to do nothing. Everything's still good though with NASDAQ, right? I mean, we're still in a bull market. I don't see this as a blow off top like people are calling. You still have way too many stocks that look good to me for it to be a blow off top. So let's get into some trades that were done. Let's see. So Friday, I had started a position in Amazon. I wanted to start a position in Amazon on Thursday. The risk to reward here is just so perfect. This would have been Thursday right here. But the problem is NASDAQ was certainly overbought in my opinion, right? This was like right here, I think, right? Thursday. And so I figured a pullback was going to be coming. So I don't really want to start a position in a situation like that. But anyways, so I had held off on Thursday. Nice, beautiful day on Thursday on big volume. I don't know if you can see this because the camera screen's there, but definitely great volume, great close, really strong day. So then heading into Friday, same thing. Nice strong price action in the morning. This is Friday. That's a 5-minute chart. So then I said, screw it, you know, this thing's acting super strong. Some good AI data has come out from Amazon, which is what I thought they were lacking, and maybe why they're underperforming against their peers. So I added some calls, long calls right here, like literally right here. on calls, Amazon, August 16th, expiration, strike price of 185. So how I like to trade options is more conservative. I like to buy in the money call options with at least 40, preferably 60 days to expiration. So right around there, around 60 days is what I really like. Sometimes longer too. But that's just because of time decay, and I like to give my positions a little wiggle room to work. That just what I found works best for me. So that's a strategy that works for me. I stick to it. So anyway, so this $11.57 contract. Nice strong close. And then my plan going into today was I expected strength to be sold in the NASDAQ, specifically NASDAQ stocks or tech stocks. So I had set an alert for 189. Got the alert basically right at the open, and that was where I was going to exit. Sold the calls for 13.45. That's a gain of 13%, which is nice, it's cool. Nice Friday to a Monday. Now, typically, if this was just a straight equity position, I would not be selling. There's no sell rules that have been broken. I just trade options a little bit differently than I do an equity position. So given the fact I thought strength would be sold in tech stocks, I got out, and I'll may or may not get back in Amazon. Amazon's a weird one to trade. It's so jagged, and none of the patterns to me make sense. So that was that with Amazon. EEM, Emerging Markets ETF. So I really, for my style, is I trade ETFs, mainly like index funds, so the Qs or SPY or IWM or DIA, right? Or those things, or maybe like a home builders ETF or whatever. So anyways, emerging markets, what I had started this position, so first of all, so why does this look good? So here you'll see resistance, boom, 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 nice channel, nice building channel. It's been like a year, right, since this thing's been building. 23, 24, yeah, year and a half, something like that. Right, so you'd like to see this nice long base. You got your 50-day moving average that is moving up. You have the shorter time frame moving averages that are converging, and you have the 200-day moving average that is starting to move up. So I had started a position back here. I was getting crushed on it down here. Obviously, that's a huge gap down. Once it held this 50-day moving average here, right before the close, I had added pretty big. And then I think the next day or at some point in here, I had gotten out for break even. But we are still in this with other calls that I bought. I bought longer dated calls. I had actually messed up and I bought short dated, like 30 days to expiration. I just had messed up and saw and thought, oh crap. So anyways, got out of that position for a break even, and added with longer dated call options. So we're in August 16. $42 strike price. I got in $1.30 per contract. It's currently $1.54, and this close today really kind of sucked. But the close today for all indexes were pretty bad. So it's okay. No sell rules were broken. If this can build momentum over 43, that would be really nice. And then anything over 44, and this would start really ripping. So I'll let it work towards that. And see what happens. If this thing continues to just kind of chop sideways and whatever, then I'll probably get out. That's the one downside with options, right? But with longer dated call options, you can mitigate that, time decay when the underlying is kind of trading sideways, so you're not really losing as much as you would with short dated call options, which is why I just don't like those really at all. There's certain occasions for them, right? So if I'm in a good position, let's say like in NASDAQ, for example, got a bunch of long dated call options and price is moving really good, is broken out. I have a nice cushion, real strong day, nice strong trend day. I'll get in for a shorter dated call option, but there's pretty much few exceptions to it. Moving on, we have L3 Harris. L3 Harris, defense contractor stock. Why am I in this? Before we move on from emerging markets, we'll talk about why we're in this one. So first of all, in a bull market, money will typically rotate. So we've seen, tech stocks do fantastic recently. And I think they'll continue to do fantastic, but just kind of, timing wise, money will rotate. And so I'll rotate it into things like Dow Jones, for example, or more emerging markets. I think that this chart is really nice and the risk to reward here is very good. That's basically all I care about. Now, the thing with emerging markets is this fund, like 9% of the fund or some crazy amount, is in Taiwan's semiconductor. And then there's some Chinese stocks and like 1% and all sorts of crazy things. So, how much of this is actually emerging market exposure, I don't really know. But, okay, so moving on. L3 Harris, defense contractor. Okay, so this is an equity position. I have my mark here. I'll probably get out around there. Depending on what it does, obviously, but this is kind of my goal, my target right here is my goal. Cost basis on this one is $219.21. The reason for this, one, a lot of money is going into defense contractors. And beautiful bounce off of the 50-day moving average right here. So I started buying right here, all in here, and as price works, I add. That's my style. That's things are working. I'm adding. So the cost basis got up to $219.21. It looks okay. Close is okay. I don't know. Might get out 228, 232, something like that. It's not in any sort of extreme overbought level. So anyways, okay, moving on. And another thing with L3 Harris Technologies is their CEO is very accomplished in this space, in this industry. I think he's been in this industry since like 96. And he was the president or CEO of Lockheed Martin. He's been at Ernst & Young. He's the CEO and chairman. So anyways, super accomplished guy in this space. Okay, moving on. Goldman Sachs. This is one of the best looking charts that there is, in my opinion. Granted, I don't look at a terribly large amount of individual stock charts. I mostly am looking at indexes. But I'll look at, very large stocks within the index, right? Because that obviously dictates the move of the index. So anyways, Goldman Sachs, beautiful looking chart. I mean, this thing has been consolidating, massive saucer, saucer and pan, or big pan, whatever you want to call this chart, since, let's call it, I mean, man, you could maybe go back here, but this is still a bull market. Still a bull market, no longer a bull market. So let's just call it, it's been consolidating since February 15th of 2022. So we've got, 2 years of nice consolidation, which is perfect. This kind of flagging pattern up here, which is my all-time favorite, and the flagging pattern volume has really died down here. I don't know if you'll be able to see it because of the camera, but anyways, super strong close. Let's look at this on the weekly. Yeah, looks really good. Monthly. Looks good. Monthly. So, Goldman Sachs is almost like a weird kind of comeback story. They had really fallen out of favor and were really underperforming financials, like their peers in the industry. So their revenues have started to increase. They were kind of loud there for a little bit about the whole DEI crap, and pretty loud about that. Revenues were shit. They've quieted up about that, and revenues and stock price reflects the performance as it should, as you'll typically see. So anyways, cost basis on that, $459.13. This is good. This is an exciting one. I'm kind of excited. Yeah, I'm excited about this one. So we'll see what happens about it. And then Palantir. Like their CEO at Palantir. Chart's good. In terms of an actual pattern, it's hard for me to pick out with Palantir a pattern. You can obviously tell it's uptrending, but it's pretty, kind of jagged. You've got this earnings here, boom, big gap up. Now the gap up here is nice. But then here on this earnings, huge gap down. But it looks good. The thing with this is the risk to reward is not good right now. So typically in this situation, what I'll do is just a starter position, or if I still like the chart, like the company, I'll start with a starter position to where, if I'm proven wrong, it's not that big of a deal. And if I'm proven right, I'll continue to add along the way. Now, something I just noticed is the volume here on those last 2 days was pretty big. But Friday was also that crazy, like 5 trillion and options expiring day, or 6 trillion or whatever it was. So maybe we can give it a pass for Friday. Yeah, it's okay. Well, we'll see what happens. It's worth at least a starter position in here. Just an equity position. and I'll keep everybody updated on that one. Yeah, so that's it for my current positions. We'll look at some plans for tomorrow, and then go over some futures trades that were placed today. Plans for tomorrow. So we've got the S&P 500. No opinion. We got the Qs. No opinion. I could see this. I could see it being an up day. But for me to start a whole new position here with, going long options here is just not for me personally. Although this is bouncing off the 30 here. That gap did get filled. But see, if I did start an options position here, it would be more of a shorter trade, and the risk to reward would not be that good for me. We'll see how this pans out tomorrow. I can see it being alright. Alright, let's go over to the Russell 2000. This could kind of go either way. The thing I do like about this is the risk to reward here is nice. And that's pretty much all I care about. But see, on the IWM chart looks worse. I typically like to look at futures charts more so than the index ETF. Risk to reward there is nice. The problem is they have been such a huge laggard, so I don't want to go long laggards typically. All right, moving on, Dow. Dow. So, like I said, so Goldman Sachs, beautiful looking chart. Amgen, same thing. Dang, today was a great day. And then whatever else is in there, United Health, I think is the largest position for Dow. You should freaking cut this out. What has this done? Literally nothing. 3 years, it's ridiculous. This doesn't look, terrible. This is an absolute no-go, but that doesn't look terrible. So it's like the top 3, stocks in the index look great. Caterpillar, looks okay. So, the problem is you got the Dow right here at resistance. But the 50-day has started to move up. I like the Dow. I typically have had pretty good success trading options for the Dow Jones just because I think the volatility is lower. So when you do get that good price movement, the price of the options contracts really do increase pretty substantially. Okay, just moving on. I'll do this quick to some options trades or futures trades that were done today. Today was a day that I didn't think would be a trend day, so typically I don't really like to place options or futures trades on days where I suspect that it'll be kind of choppy, and today was one of those days that I did suspect it to be choppy, and it was kind of choppy, but I still did place some trades. Now I haven't written any of these down. I didn't write these down. So we'll do our best here. I know right here I had placed a trade at like 2060.1 because just the risk to reward is really good, right? If it got below 2060, I would have been out. But especially with a choppy day like today or non-trend day, I'm not going to buy and hold futures contracts. So I got out at 26.5, 2060.5. So that was for 4 ticks. A tick in the Russell 2000 is $5 a contract. So that would have been $20 a contract. You know, I mean, that's whatever. Not really stupid, but I don't know totally if it was worth it. I mean, it's fine. That one was fine. We'll move on. Last night I did one in the Nikkei. Wow, look at this thing. It's really moving up. Huh. Maybe it's time to go along Japan again. Anyways, okay, so last night, dumb trade, horrible. It was literally right here, literally right here, 20, and I got out for a single tick higher at 25, and I mean, I like literally bought and sold the absolute top. Each tick for the Nikkei contracts is $25 per contract. So those can get pretty hectic for me anyways. So yeah, I think I did one in Dow as well. I can't quite remember. I didn't have any losers today with any futures trades, but nothing that exciting, you know. I had missed this opportunity right here. I was away from the computer. This is exactly what I like to trade with futures set up right here. Clearly defined risk to reward. Comes down, scoops up all the stop losses, bounces higher. But that's it. And hopefully we can get this thing uploaded and see what happens.